Hello everyone, this week I'm looking at Ethereum, which dropped heavily after a $100 million DeFi exploit on Balancer created heavier selling across the ecosystem. Let's check the technicals.
Ethereum has now broken below a very important support at 3,700. Why it's important? It's a level that acted as a reliable floor throughout October. So losing it is significant. Price action is currently sitting near $3,500 zone, right on the lower boundary of a descending channel. Structurally, we're still respecting the downtrend and we haven't seen a confirmed breakdown through the lower channel line just yet. This bearish momentum also comes at a difficult macro moment. Fading expectations for Fed rate cuts, thinning on-chain liquidity, and an ongoing rotation toward Bitcoin are all leaving Ethereum more exposed in the short term. Over the next few sessions, what really matters is whether Ether can hold above the $3,500 zone. If it does, we remain in the downtrend, but the lower boundary is respected. However, if prices breaks below and closes under $3,500, the path might open toward $3,300, which is the next major support on the chart. RSI is leaning toward oversold territory, suggesting that a deeper break beneath the current channel may need a breather first. So we could see some choppy or corrective price action before any clean continuation. For those trying to buy the dip, it's important to watch how price reacts if we see a recovery back toward $3,700 area. That's the first meaningful local resistance. A sustained break above $4,000 would technically signal the end of the current bearish move and shift momentum back in favor of the bulls. Short-term volatility is likely to stay elevated as the market digests the balancer hack, macro uncertainty, and current institutional positioning. Until liquidity improves or we get a clearer catalyst, the bias remains neutral to slightly bearish, with tactical opportunities around those key technical levels for medium to long-term positioning.